Okay, welcome everybody to this evening's ACY Securities webinar, live forex market review. My name is Duncan Cooper. Thanks very much for attending. So before we get into it, if you can read through the risk disclaimer, if you're on our YouTube live channel, live stream, I cannot see your chat, but you're more than welcome to join us in the webinar. I've given you the link there. For those in the webinar, you can ask me questions in the chat or the question and answer box. So any questions, just type them in. So everybody, please read through the disclaimer. All right, we might move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and been trading the forex market now for more than 15 years. I'm a full-time forex trader. That's what I do when I'm not doing webinars and providing analysis. And so I've been trading the forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is down screen, duncan.cooper@acy.com. Through the week, you can connect with my analysis at our website, acy.com. Go to the Market News tab, our YouTube channel, go to ACY Securities Australia, or you can connect me through the week on Twitter and LinkedIn as well. You can connect with us in the Telegram channel. Just contact Nathan.bray if you don't have access, providing analysis in there throughout the week. I'll put Nathan's details in the chat in a moment. If you want to get access to my chart layouts and templates too, then just contact Nathan. So any questions about what's going on at ACY, just contact Nathan. Any questions about a demo account or a live account as well, just contact him. I'll just put his details in the chat. There we go. All right, now, of course, this week, we're just going to have a look at the news before we get into the charts. We've had like a heap of news coming out, making it very difficult to take a trade and hold a trade. We've had the US CPI data, the US PPI data. Then this early morning, we had the US FOMC interest rate decision where probably surprised the market in that they didn't raise interest rates. That was what we were expecting. But then they pretty much said that they will probably raise interest rates another twice. They're anticipating to curb inflation. So I don't know why they just didn't do it yesterday or this morning. But in any event, that was probably a bit more news. I think most people probably thought that they were going to pivot to a pause at some point. You know, we'd be moving downward. But at the moment, not the case in terms of what they're saying. All right, so it's interesting that we had the GDP come out for New Zealand, and it was a contraction, or I would say a negative. I think what I read is they've now had 2 negative quarters, so theoretically they are in recession. We had the Aussie job figures, which were very positive, so it's keeping a bid under the Aussie pairs. And China news pretty much came in print, but industrial production is down, retail sales down. And the big one for the day, though, now that we have to worry about if you're trading the euro dollar or euro crosses, is we've got the main refinancing rate coming out and expecting a 25 basis point rise there. I'm sure that should be factored in, but we also have the policy statement plus their press conference, 10:45. So 10:15, then 10:45. I would say usually till about 11:15, then it will be highly volatile. So about an hour's worth of volatility there, at least from 10:15 to 11:15. And in between there, we've got some US news further coming out for retail sales and state manufacturing index. All right, so once we get past this, we do have tomorrow as well, the monetary policy statements, all these central bank themes coming out this week. Once we get past that, we hopefully will have a much easier environment to trade in, because at the moment we've just been swinging from one news event to another. All right, now let's get to the charts, and we'll start with the dollar index. And I've been saying that this could pull back to the 62% level of last month's move up. that I've got colored in here. Not sure whether it will get there. We, a bit more positive from the Fed than I think people were anticipating yesterday. And the market's just absorbing that information. It's going to be interesting over the next couple of trading days as price action settles down, whether we will be pairs to the US dollar still moving up or not. We'll have to wait and see. Price is definitely overstretching at some key resistance levels. So we're not at great levels to just jump in and say buy. So we'll have to wait and see whether this can pull back deeper, maybe to 62% level on the index at 102.36 and support here. I'm just monitoring that area. If we keep pulling back, pairs to the US dollar are going to be moving up. All right, S&P 500, I know has been moving up. We've moved above the last lower top on the monthly chart here. I mean, there is the question as to whether the US goes into recession, and they are still raising interest rates potentially. There is the question that even though we're above this high here, that we could be coming up still to form a major lower top to this top, especially if they have a recession and interest rates stay high. That's going to impact the stock market, sure. So, but at the moment, this is now in an uptrend on the monthly chart. It's in an uptrend on the weekly chart, and it is on the day chart. But we're 1, 2, 3, 4, 5 days up here. So do you want to be buying the index on the 5th day or the 6th day up? Probably not. You want to look for a pullback. So at the moment, for this overall trend to remain now, if you like to trade the S&P 500, look for like a 62% pullback. So if you could stab down to 62 and then get support on the monthly top that we've broken above, that would be ideal for traders on the S&P 500. That really moving back below that monthly top, it never gives me a strong sense of purpose to be a buyer if that happens. So it really needs to maintain itself. It can pull back to support and stab into the 62, but if it's starting to want to close below that level, then I would be a cautious buyer after that. If I was long from down here and I saw this close back below there and it was holding below that level, I'd want to take profits and close my trade out. I wouldn't want to be starting to think about opening a trade. So you just have to look at the position of the market, where you're at. All right, let's get into, we might as well start with the euro, seeing as we've got that headline news event coming out today. So let's just go to the day chart. Now that is the range of last month. We actually closed, or traded down on the last day of the month. And the question in my mind, so that's the move down from high to low last month. We load on the last day of the month, and we're obviously moving back up at the moment. So I'm watching up here at the 62% level, 109.09, 109.16 area here. Now, if we do get up today on the Eurozone news, that might be a worthy level. That's the opposite look of the dollar index and where I'm looking for support. So that would be a worthy level to watch for potential resistance and a move back down. Where the big question is, the move down last month, can it continue this month, or are we simply moving all the way back up to 110.33? Now that is quite clearly in a day chart uptrend. So, and this 4-hour structure here at the moment is quite clearly up. So everything is actually up in terms of when you're looking at the daily and 4-hour chart. So I'm anticipating, if nothing really changes when the news comes out today, we will be trading up potentially, towards this 109.09 level, 109.16 area up here. And then what will price do there? At the moment, we break it into a 15-minute chart. Support. So what I'm noticing is at the moment, and I'm doing this on a number of pairs, is when the Fed came out, we had this drop. So we got support pretty much at 108. All right, so this is your support area here, because that's where we bounced after the Fed did its thing. And then we bounced up to this high here. And you can see today's trading, we couldn't actually trade above that high. So these are your two main reference points intraday at the moment, where buyers and sellers are containing price action. Now, I don't know where price will be when the interest rate comes out, but these are the two reference points at the moment, and they may well be reference points after the event. You know, we may fail up here and we may get support here. All right, so those will be the two boundaries that we'll be watching in intraday price action at the moment. So approximately 108.45 resistance and 108.01 is support. All right, so we might just come up to this level, head, hold, and move back down, back into the range at the moment. I don't think it's going to go too far as we wait for the interest rate decision to come out. All right, so those are the levels I'm watching at the moment. You know, if we do go berserk when we get the decision, I'm just monitoring that higher level up there at the 109.09 to 16 level as a potential sell level if I can start to see price want to pull back down from. At the moment, though, these are the most immediate levels to watch after the event. Now, the euro yen has gone absolutely berserk. A lot of the yen pairs, I say a lot, all the yen pairs are moving up. We've got the Audusd decision tomorrow. So this has been held. If we go to the monthly chart here, it's been holding here. This is where technical analysis can get difficult when you have a negative month. The previous month, it's holding below this top, and it failed to get to this low here. But quite clearly, we can see this is breaking significantly north. So there's no question where the trend is. It's up at the moment now. All right. We're very high up on the weekly candle and very high up on the daily candle today. You know, I'm never going to buy at the top of the daily candle there. So, you know, if we have clearly moved above this top here at the moment, then, you know, T4-hour chart at the moment, you see it's just running hard at the moment. So need to wait for a pullback. Of course, we've got the interest rate decision coming out as well. You know, the last month's high here, this would be your reference point for support if we get a pullback at the moment. Last month's high, 151.61. The monthly resistance from way back in time is at 151.70 from memory. So this is your support level now for a pullback. This is way overextended. You know, I never buy when we're way overextended, and I never sell if we're way overextended either. It's just too high up. So, you know, I would have to be cautiously looking at least for a 4-hour fib pullback whenever that can occur, and just be patient. Now, you know, this might go up a little bit higher. And of course, if the 79% level starts to overlap with your support, that would be ideal. So look for a pullback. Don't get this fear of missing out. You know, go to the 15-minute chart at the moment. Don't have this fear of missing out. This is already up at least 120 pips. Let's just measure it. 135 pips, and it's really started, you know, it's really started from over here. So when it started to get support for a break higher, you know, it's already up 220 pips. You know, you need a pullback to be a buyer, or you do in my mind. So looking for some form of pullback. That's the 4-hour range at the moment. All right. You know, there's no way I'm looking to short that either. Up here, I'm just looking for we're looking for an opportunity for a pullback to be a buyer, as long as we are holding above this last month's high here. Moving back below there isn't good for the buyers. And the euro pound, it's asking itself at the moment, you know, if you go to your monthly chart, we're on monthly support here. We've got 2 weekly lows here, one of them being monthly, the lower one. It is in a downtrend here, but it's asking itself, is it going to hold on support or not? Now, it is still making lower tops and bottoms, but we're actually having a day up today, putting in a minor higher bottom here. So we could be getting support here to move up. I mean, I don't sell into support, buy up from support. It would be nice if the 4-hour trend actually started to show up, but it has been a little bit difficult. Well, you could actually say it is up. If you're looking at the bigger ranges, and draw a fib like so. 79% fib here where we've rejected today on the last previous 4-hour candle is on support. So you have an overlap of monthly support with the 79% fib. You know, breaking back above 85.65, which is weekly broken supports, probably suggest that we're then, you know, coming up to test this high. Right, so it's just looking a little bit suggestive there that it's getting support. Of course, it's got the euro in it, so it's going to be highly affected as well with the interest rate decision. So understanding the structure and what's going on there, you might be able to revisit that later on when the news comes out. All right, so look at the pound. Now, very interesting, the pound. It's obviously in a strong uptrend now, but it is at resistance. So let's just take you through. Let's just talk about the significant level that we're at. Because we failed at this level, last month's high failed at this level. This is my monthly chart, and it's at a previous low point over here, which is 126.61, which overlaps with this weekly high that formed last year, 126.67. Notably, we're at 126.64. And this high that moved up to there was at 126.79. So that's where we failed last time to move down. Now this weekly trend is up in terms of another higher bottom forming. We have, I think, fractionally traded above that top, but clearly we're right at that resistance right now. You're going to buy into resistance. So as I say, we've gotten overextended up to key levels. We could obviously be moving through here over the next couple of weeks, but I think you need to look for some form of a dip. A dip back to day support is back down to here, 125.46. And we've just had, we actually tried to fail there early in the week at 125.46. Start of the week, we reversed back below there, but then we've obviously popped above. So support is at 125.46 and we're at resistance. So, you know, just monitoring for a dip. That last impulsive move up like so. 79% at 125.32, 25.46 levels, that level of day support, potentially now. You know, look for a dip. Now there is the other side of the equation, of course, last month, when we were right where we are right now. So that's the high of last month. To get short at the moment, I'm going to need a little bit more information because this has been very strong, but potentially, yeah, we failed here last month to trade down to 123, close to down here. So we could just be failing at last month's high. And, you know, you can see same story when we break it down to the 50-minute chart in a moment. We've started to hold at that level after the interest rate decision from the US. All right, so let's just break down, you know, into the 50-minute chart here. At the moment, that was the low when the news came out. And then the bounce, where the market came in to keep price capped at the moment at that support old. So where it's been capped at the moment at resistance. So we actually came up to there on the bounce. Dropped when the news came out. That's where we bounced. But you can see that's the Asia high. This move up through London at the moment, it's been stemmed at the Asia high. That's last month's high at 126.79. So you can see the rally back up after the news event got held at last month's high, 126.79. So there is the question. I just want to draw a fib across this drop just to see where we are within the fib tool. So you can see the London session rally. So we actually rallied up to the 79% level from the drop. Today we're, you know, trading, we're getting held at 62. So there is the question, if you know, I want to see a bit more information at the moment. There is the question that we could be holding here at resistance, and we don't long term want to move beyond. You know, we've tried to move beyond and now we're holding, and we could be getting ready to move down. So at the moment, I'm still going to keep a more bullish perspective. And, you know, if this just trade down, I think the first step is to look to see if 125.46 holds as support for then another move back up to test resistance. But of course, we could be failing there. So, you know, we all have to make a decision on what side of the market we want to trade at. So, but I mean, ultimately the weekly day trends are up. So I think trying to go in opposition to that at the moment is a little bit hard going unless we start to see a breakdown. All right. But those are the references intraday at the moment. The Fed high and low, intraday highs and lows that got formed there after the news event. All right, pound yen. There's no question where the trend is at the moment. It's getting very high up though. And if we look at, you know, I get very concerned about trying to trade something when, if I'm looking, say, at the monthly trend where we pull back to approximately 62.79. Now we're at the 127 extension. Now we can move up to the 162, but we're in the profit phase, profit taking phase of the move up. Now, if you were looking for this to move up to where we are right now, you should have been buying this way back down the track for a positional play. Next major level is at 184.12. All right, so, you know, I'm not suggesting that we should be shorting, but you have to look for a very good opportunity to be a buyer on a dip. Because, you know, we've just had today, we've already done a large week already. That's probably the biggest one or equal to the biggest one. You know, the last big candle that we had up here, the next two weeks were negative. And then we've had 1, 2, 3, 4, 5 weeks. And, you know, this is rushing up so fast because potentially there's a whole bunch of people that were short and they're having to cover positions, and that, you know, getting out your sell, you have to buy. So I suspect this big rush that we're getting on some of these yen crosses at the moment, people are short and they're having to cover their positions because they feel like they're really wrong now and they can't live with that short position anymore. But just be aware of the position of the market. We are way overextended. This area that we've broken above this week, 174.66, which is monthly resistance. Oh, sorry, that's daily resistance. That was 174.83 was monthly resistance, and I think 175.100. Go to the weekly. There's a top there that we've broken above as well. I think that was at 175.104. Moved above that area. You know, next week, look for this area to be support. All right, but don't, you know, there's your 4 hour. Just holding to the 4 hour trend at the moment, look for a pullback. All right, but you know, it's each to their own as a trader. When I see that we're at that 127 extension now of that monthly range, I don't know if I want to buy a pullback personally, because it's in the profit taking phase of the move. Of course, this could just go up for another 500 pips, but really, you know, if you're taking any kind of position, you want to understand where you are positioned within the current up move. So if you want to look for an opportunity to buy, I would be looking, you know, to the 62.79% pullback zone area, and then what does price do intraday at that area. All right, at the moment, hopefully getting the idea that, you know, some of these pairs are way extended. All right, cover the pound yen and pound dollar. Pound dollar still holding there. Euro is coming up to test that Asia high and the Fed high there. All right, let's get into Aussie yen. So Aussie yen's just having a sell-off here. And you know, this is a pair that's overextended. So as I said on Tuesday, let's get rid of a few lines off here. Don't need that one in the middle at the moment. The actual trend here on the monthly, whilst we're having a massive month up at the moment with the Aussie giving us an unexpected interest rate hike. Then exceedingly good job figures. Very bullish month up in terms of a month, but the actual trend on swings is we're actually down. We're coming up. We actually had a lower bottom and a further lower bottom. We're coming up potentially, to form maybe a lower top somewhere up here. We could be forming a head and shoulder pattern up here from a left shoulder, head, right shoulder. Okay, it's very bullish on the day chart. There's this major range here where we're a little bit above this, fractionally above the 79% level. I've got two 79% levels that we're fractionally above at the moment. I'm not looking to sell at the moment. It's not giving me an indication to sell, but I'm very aware of that monthly structure could lead to a topping out phase over the next week or two. Up there at the, we're in nosebleed territory up there at the moment. So your weekly, that's in an uptrend, but it's just because of the big rush up. You can see when we topped out here back in whenever it was, August last year, we were really struggling at the 95.73 area here for quite a while. We had this false move up, came all the way down. All right. Market's going to ask itself over the next few trading days, these highs here. So my reference is 95.73. The higher one up there is at 96.87. The market's going to ask itself, are we going to hold here to turn around? All right, you can see we've had I don't know how many days here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 10 or 11 days up there without a day down. All right. It's due a day down or a few days down. All right. This could obviously continue up and take out the high that was formed last year. But, do you want to be a buyer on the 11th or 12th day up if you're not already long? Because I'm sure people are starting to take profit in this zone. All right. And just back to the weekly. Now, depending on what today brings, we've got the Bodge event tomorrow as well. This is a very, very historical level of resistance up here at 95.78. Just watching to see at the moment, do we get some kind of significant rejection up here tomorrow when we have the Bodge event? If the Bodge comes out tomorrow and goes, hey, inflation's just upticking and we might need to tweak our interest rates, this is going to drop 500 pips because that's what happened when they did that conversation last time. So all right, well, if you're just in the frame of mind that you want to be a buyer, then, look for a dip. Draw your fib across your 4-hour range. Look to your 62.79% levels. All right. You got 4-hour support there at 95.04. And I know on an intraday perspective, 95. We tried to move back below 95 yesterday and then pop back above. So I'm sure if we move down 95, we'll offer some form of support intraday in the short term. Okay. So just monitor a pullback. Don't get caught. This is already today. It's already up. From the 4-hour run up, we're already up 180 pips. Today, we're already up probably 120 pips. All right. Don't get caught buying at the top of the day, the top of the move. Look for a pullback. All right, the Aussie. It's like I was doing on the other pairs. I've just got a fib drawn across the range of the drop from yesterday, and the 79% level on my 50-minute chart here overlaps with the major resistance level, last month's high. All right, and the question is, are we moving higher? With all this good news for the Aussie at the moment, let's go to the day chart. Now, again, we haven't had a day down in, 2 weeks. Sooner or later, it's going to have some days down. It can't keep going up without having a pullback. So I'm not going to look to buy at the top of this move. And at the moment, the market's asking the question. You can see the shadow or wicks coming in at the top of these candles. I thought after yesterday's rejection, we may just trade down. But of course, we're still popping up after the job figures. Now, that high is May's high. That is April's high. and we keep asking questions at these highs at the moment intraday. At the moment, we're pretty much dealing right at that high, 68.18. You can see up here, it's almost 68.18. You want to be aggressive, you could be selling here with a 100% stop if you thought we were going to fail here for the third time. Or, you know, I think the play is to see if we get a reversal, but it's not quite showing. There's no candlestick really showing. 4-hour trend is maintaining its upward move. However, that was kind of equal highs down here. So if you wanted to be aggressive for a short, that's the move back down yesterday. As I said before, 79% level overlaps with your monthly high. It is a clear level to trade from. It's just a question, question in your mind is, with all the good news that's been coming out, is this good? Is this going to eventually follow up and through? How much information do you need to say, okay, it's holding here to get short? But, try to move through early London. It's fallen back below. Held once, twice. This is the third time it's having a go in London. The more times it's holding here, the more and that's the run back up from the Fed release. Drop down, run up to there. That's where it's been held. So it got held at last month's high. But moving down, I guess this is the area to sell at. You just have to work out how much information do you want. It's a hard one at the moment. I'm not selling at the moment. I'm waiting for a bit more information. I'm certainly not buying here. I'm not going to buy into resistance, but with we've still got some more news to come out today. So I'm quite happy to wait to the end of the week or early next week just to see if we start to see a breakdown in price action, but we're at clear resistance there. I mean, you could start today to look for a very tight, very tight trend line break and reversal here. All right. All right, got the Aussie pairs. Euro pairs recovered. What's the euro dollar doing? It's right up at that level. Pound, what's that doing? No, it's turning down that pound. If you want to be aggressive, all right. After, it's very, we get these very strong moves up where we move above resistance and everybody's thinking we're going higher. And then the next day, it just can't exist above it. Is that your telltale sign that you should be selling? All right, you have to make your decision. What side of the market you're on up at that very significant level of resistance there. All right, let's get into New Zealand yen. I put this out on Telegram today. I actually did both the New Zealand crosses today on Telegram. Is from the monthly chart perspective here, we're at the top of the range. So it looks very similar to the Aussie yen, bit different, but similar. This has been since April last year in this range for the best part of 14 months now. In this range, you're at the top of the range. Top of the range last month, we sold straight back down. You can see the rejection candle. All right, so we're up here testing. See all these weekly highs to the left where we kept holding. And, sometimes price moves are up for 1.5 weeks above the highs, and you might start to think we're moving above and through. You have to have this, well, I have to have this hard and fast rule that if I've got this clear resistance area there, I need to really break above it to start to think about being a buyer. Otherwise, I just feel like we're going to fail. Because here, when we had a higher top, we traded up for 1.5 weeks or so. Then we traded down to the low. Then we traded back up to another higher high. Then we traded back to a lower low. All right, so up here, even though this is now theoretically a higher high on the weekly, it's the same deal as over here at the moment. All right, this is where resistance trumps your trend. So yes, your day is up because you got a higher bottom, higher top. And as I put out today, watch in this area. We failed to get to monthly resistance last time. We held at daily resistance 87.20. This time we are into the monthly resistance area, but you can see that we're almost back below the daily level, and we can't hold it that high either. So we are rejecting in that area. The sellers are watching that area. So it'd be nice to get a rejection candle. It would be nice on the 4-hour chart to see, just to see a structure change. At some point, you know, we get a lower bottom to come in, and then can we see a rally, you know, back up for a retest of this area to a 79% level and a failure. All right. So I'm just monitoring the area. Now, at the moment, it looks like it's rejecting. By the end of the day, we might not have rejected. So I'm just being cautious because of the very volatile environment. We obviously got the bodge coming out tomorrow as well. So when that finishes, we could just blow through the top. So give me a couple of days to work out, see what it's going to do. Is it going to hold there? But again, another pair that's 1, 2, 3, 4, 5, 6 positive days. You want to be a buyer on the 7th day at resistance. All right, New Zealand dollar. All right, I put this out on Telegram today. This was the high to low of last month. We came up to the 62% level yesterday. Of the smaller range, we're at the 79% level. So we're overlapping fibs here. And, you know, the weekly trend here is down. That's moved to a lower bottom. This is potentially coming in to put in a lower top somewhere. All right. Nowhere near coming up to the high levels of resistance like the Aussie dollar, like the pound dollar. So we may have failed in this area, which was 62.31 to 62.36. Still trying to hold its data, so it's 4-hour uptrend here. So, you know, can the 4-hour trend flip, turn over? Not quite done it yet. We have kind of come up and maybe put in a potential lower top here. We'll just have to wait and see what price does for the rest of the day. It's getting some selling pressure now at the 62.03 daily resistance, so the 6200 level. But, you know, this imbalance here that formed when they had the interest rate decision here and they just dropped down, look where it stopped at. Stopped at where this imbalance all started to form. And that was an outside candle, so it's much more, the imbalance is much more up here where the break of support is, and that's pretty much where we came to. You know, it's like magic, these imbalances. So that's a very significant area of resistance where the market's reacting to. It might come up for a further retest, but it'd be great if we could come up for a retest. It might not get beyond 6,200, but we'll have to wait and see. Can it come up maybe up here for a retest and put in a lower top? All right, so just monitoring at the moment. Still holding its potential uptrend there. And you can see on for 15-minute time frame here where that's the funds low. We're getting support at that level at the moment. So if you think we're going much higher, that's where the buyers are holding the market. And, you know, that drop yesterday, which has moved down to there. 62 level at 62.06. Figure, day resistance. Now that might be as much as price can get to. You know, the last move up from here, well, you know, got in the area that I'm just highlighting. So, I mean, that could come up for another visit when the US news comes out, but you can see there's Asia's high. Any rally got capped fractionally short of that at 62 during the first third of the day. So that's the area to watch at the moment. That's where it's getting capped on the sell side, but we're also getting capped on the, you know, down here for support for the buyers. You know, so those are your reference points. It's a little bit choppy and range bound. The market's still absorbing the news from yesterday. It's asking itself, should we be buying? Should we be selling after what came out yesterday? Intraday at the moment. There's a definite fight on a lot of these pairs. So which, you know, I like to, when I'm seeing this kind of price action, I like to see the 4-hour chart. You know, if I think we should be selling and we're getting a reversal, then I want to see the 4-hour structure turn to down. Well, and we don't have that at the moment. So, all right, that's the New Zealand dollar, dollar Canadian. All right, so it's testing this weekly area. In fact, I just want to double check. And there's a monthly area there too. The lower level is monthly level. So a little bit like the inverse of what we're seeing maybe on the New Zealand yen at the moment. All right. On the weekly here, you can see the range. We're trying to come down to the lower level here and test the lower level of monthly support, 132.62. And we have 2 weekly lows here that we're testing as well. All right, so lows 1, 2, and 3. So the whole area is strong support. You can see we actually haven't closed below any of those levels. We've been trading down when these volatile news items keep coming out, but then we're moving back up. So there's no actual market conviction to hold below and move below. So watch this area. It's 133.14 down to 132.62. That is support. If we move down again today and then come back up, that might be the last stab down there. So it would be nice for the 4-hour trend to be up, and it's not at the moment. So it would be nice to see some kind of higher top come in. And you can draw then a fib for, you know, to look for a pullback. And that pullback might come to a 62% level back to support from some form of, you know, left shoulder, inverted head, right shoulder over here on the right side. So just be patient and let price action tell you that it is maybe holding there. You may already have enough information in your mind to say that's holding there, and you could be trying to just, you know, let's say this spikes down today on the news. When it gets maybe close to the low yesterday or somewhere down there, you could actually be just looking, you could be drawing a fib from that high, low to high, even that's a lower top. 79% levels down there at 132.89. There's a low there. False broke, came back up. We might get a left shoulder and then a right shoulder forming to the right side here. So you could watch for price to spike down into here. If it starts reversing on the 15-minute chart, that might be enough information that you want, because that is strong support down there to try and trade up. You can see yesterday we were down here. Fed does its thing, straight back above support. And today, we haven't been able to trade down to that level today. All right. The Fed low, you know, Fed low is here, around about 133.02, something like that. So it could spike into that. So 133 here might offer very good support. 133.01 is one of your weekly levels, and the 3300 level there. So watch down there for support. It's telling you at the moment that I can get these to deselect, that we can trade below there, but we can't hold below there. So don't get caught. You know, if there's anything that you don't want to do, is just don't sell under here, because it's probably going to pop back up on you. All right. Right, that's a dollar CAD. Dollar franc, very choppy. It is managing to maintain itself at the moment. This old area of broken support became resistance for this move down. We are seemingly holding on that level. So the 90 level may be holding. It's only trading in about 100 pip range at the moment, dollar franc. All right, I just want to see where the areas were when we had the news come out. Make sure the price action on here is totally accurate. There's a few missing. That's the low point after the Fed news. But you can see what we popped above And then we started to want to, through this area here, hold on the 90 level and the 90.02 level. So watch the 90.02 to still be support on a pullback at the moment. It's offering support. We had a very strong reversal up on the monthly chart last month. So we're getting support at 90. And if we squash this in, you'll see that we've been trying to get above 90.84, which is monthly resistance, but we can't hold above the area. So we're kind of trying to get above 90.04. Sorry, trying to get above 90.84. Can't hold above resistance. And then we move back below 90.02 and we can't hold below there. So it's a little bit range bound. So those are your reference point at the moment. You know, if you want to try to trade the next move up, look for further support coming in at 90.02, but then be very aware where resistance is. It's struggling to maintain itself anywhere above 90.84. So, you know, your profit range would be from support up to resistance. All right, dollar yen. Been range bound, but on the Fed's information, it's popped up to a new fresh move high. It's actually just come up to a 141.53. That is a historical area from way back in time on the monthly. There's a high there. And the next little high further up is at 142.17. All right, just getting those two levels on. So we're reacting off that old high. You know, people ask me how far back in time do you go with support and resistance. You just go back to where it is. That's back in 1991, and the reason why it's reacting there is because the market has a memory, and it's just asking the question at the moment there. So monthly trend here though is up, high top, high bottom. Weekly, high top, high bottom. We are actually quite overextended, you know, from a fib till range perspective. We're trading above the 127. So very much like the pound yen, as I showed you, and the euro yen, where we are at very significant high levels when we're doing some fib work. All right, so we've just broken out that range. Now, if you want to continue up here without, you know, if we look at the ranges, there's the range. Then we pull back. There's the new upward move. But really, wouldn't be, you know, from a weekly perspective now anticipating a pullback within this range before putting in another high bottom to move up. We're very overextended. So just be aware we're overextended. All right. In the meantime, we're trying to break out consolidation. So from a 4-hour chart perspective now, you know, support's here. If you're wanting to look for some kind of pullback, put your fib in, start monitoring the pullback. So all these yen pairs at the moment, they need a pullback in my mind. I can't bite the highs. I want to try it up. And this is the problem we have when we have all these news events coming out. Price will run to extremes. Don't get caught in the fear of missing out. It's moving up or it's moved up. If, you know, what do? Do I buy at the top because I'm going to miss out? Look for a pullback. And if you have to wait a few days for a pullback, you know, well, it's just a question of being patient. All right, gold. Now, it is now looking, Slav, I can see on there. Are you getting more excited about gold yet? We are definitely breaking downward out of that triangle pattern that I put it in the other day. You can see yesterday's high, after dropping very aggressively below the weekly high over here, 1959, yesterday's rally got pinned at 1959. So we are seeing now, let me get rid of that triangle pattern. On the 4-hour structure here now, we are seeing maybe a little bit more nicer price action. Clear kind of movements up and down. So the next movement's here at the moment. Just monitor your fib and watch for a 62.79% pullback. You know, you can see we've, if I draw the swings in, we've moved down. Yesterday's rally on the 4-hour just came back to resistance now. Then now we're moving down. This could keep moving down, so drag your fib down, and then you look for the next rally. All right, so just starting to look, and we are now today trading. We've actually broken the low of last month. All right, so we are just starting to show a little bit of a convincing move, and it is starting to. Let's just get rid of all this stuff. We go to the highest time frame. You know, last month rejected at the top, creating that triple top kind of affair. We did trade below the month low before the previous month, and now we are trading below the low of last month. So at the moment, that is looking negative, looking very suspicious, like the triple top. All right, so getting, you know, monitoring the swings down the 4-hour. Can you see, you know, now that we're maybe moving below 1959, if it can rally back up close to that area, 1953, stop above 1959 for a sell. It's looking a little bit more convincing to the downside at the moment. Okay. All right, any questions? So it hasn't been an easy week. I haven't actually opened the trade this week. I've been waiting for the news to finish. I do have a trade open on the euro dollar from higher up, so I'm hoping we don't spike up too high. I would love to be, let's just go to the Aussie and see what that's doing. I would love to be selling this Aussie, but I just feel I need to wait for the last of the US dollar news to come out. Maybe it's just a mental thing at the moment, but you know, last month when we came up here, I had no problem selling up here. But with this being so strong up here, I'm just giving this time to reflect before looking for an opportunity to sell here, because this could move up and through. That's been a very aggressive move up. So just acting on the side of caution at the moment. Edwin, you saying you're looking on gold, you were looking on gold at 1969 as resistance. At 4 days of rejection up there. So you're talking about 1969. Yep, up here. So did you get in on this spike up here, or were you watching this to come all the way back out and then it hasn't got up there? I mean, it has been very difficult. It's been very choppy. I don't think it's it's not 100% given that it won't get back up there, because got more US dollar news coming out today. But the big driving factors that are for the month is the US job figures, CPI data, the PPI data, which you had this week, and the FOMC statement, which you had this week. Those are the big driving for data points at the moment, each month that the market's looking at, and we've had those now. So now that we've had them, and with the Fed coming out and saying that we may get another 2 hikes, even though we didn't hike, I think definitely the market's expectation was maybe we're going to hold now and we're going to pivot to, when are we going to actually drop interest rates? But that doesn't seem to be the case. So that's why we're seeing that move there on gold. So we'll have to see now what comes next week. We just need price action to start to form. So drawing a fib from the highest point there, Edwin, up there, 79% levels at 1963. That resistance levels in the middle of those 2 fib levels. So, I mean, the trade would, but if it can hit 1959 again, it's really selling there. Put your stop above these highs up here somewhere. Or, a very logical would be put your stop above here. because price could fall flat back into its consolidation. So if you're selling up at this retracement area here, it could come up to test these highs. So just having you stop just above the high here, it could come up, test those highs, and then fail back down. So the more logical area is to put your stop above here, so that with this horrible price action that we've been having, you just don't want to get stopped out because it just rejects the highs again. It might be a big stop. So, however you're trading it, but from just a pure logical perspective, you can see where the dangers are. The danger is it comes back up to test these highs. So if you want a real tight stop, you have to wait for a test of these highs and try and sell it here and just put your stop above. So, but the perfect opportunity was there yesterday at 1959, because you'd be break even by now, and then you're just wondering to see where the price can move down. So, but those are the key areas to watch on gold. How you can construct your trades, it's up to you. All right. Yeah, not getting in because of the news. I'm the same. I hate it when all this news just comes in one day after the next, and we've got no idea what the news is going to bring. So you either have to weather the risk, which can be great, or you have to just accept that you're going to miss out, and you're going to have to then wait for a few days to come around for price action to do its thing and start to tell a story. Just want to go back to the pound. Now that pound, it is holding there at 126.67. And I just want to see what the ranges looks like on this euro dollar, where it's holding at. It's holding at that Fed high. It's 108.50. So 108.50, if we can spike up, is just the remaining imbalance there. So that's an area to watch today later on when the Eurozone interest rate decision comes out. What happens just a little bit above that 108.50 level there. All right, I'm going to leave you with that. So we've got the Eurozone interest rate decision coming out 10:15, press conference 10:45. That gets us past most of the news then for the month of concern, and then hopefully we're going to see some clear price action. All right, everybody, I'm going to leave you with that. Have a great rest of the week. Have a great weekend. And thanks, Dennis or Denise. I'm never sure when I see that name, is it Dennis or Denise? So don't be offended. I think is it Denise? All right, thank you very much. All right, great. Have a great weekend, everybody. Look forward to seeing you next time. Next webinar will be on Tuesday, 7 p.m. More forex market analysis. Hopefully the market has got a bit clearer after the news events, and we can start to see some setups forming. All right, enjoy your weekend, everybody. Thank you.